Hi, Ron at CCI here for your viewing pleasure. I got my risk reward vectors ready to roll. A couple new items on the risk side. China is becoming a little bit more of an issue. I think we want to put on the radar. Actually, about a year ago, I was mentioning how when the dust settles with COVID, we're talking about when the dust settles, that people are going to want some answers. And I really thought that China would know this also and try to play nice. And we're really getting aggressive and negative actions. So that's not great. I mean, just the other day I saw a quick blurb on Bloomberg that they placed, I think it was a 100 or 200% tariff on wine, and I thought they like wine. And of course, they have some other issues going on. But we really didn't know until recently what the Biden policy would be with China, and it looks very similar to Trump's. So I think we need to keep our pulse on developments with this. Um, Nothing immediate, but I think in the next few months we want to be looking out for this, or at least the remainder of the year. Um, Also, another factor, I'm sure you've noticed, COVID trends have been ticking negatively in Europe. Brazil's really bad. We need some help there. India, I believe, is also an issue. Case counts are up, and we really would like to see vaccinations increase aggressively. So let's keep our fingers crossed there. And also, just today, there's something with the CDC um, saying how I forget that there's a new UK variant that is becoming more prevalent in various areas of the U.S., including New York. Um, so again, it's a risk factor that it's always out there. There's a bit of ebb and flow, but I think this one wants to get a little bit more prevalent on our radars. Okay, rewards. What's on the reward side? The positioning in futures, equity futures, according to the CFTC. If you didn't notice, I put a post up earlier in this week with the graphic on this, and what is remarkable is that it's not remarkable, meaning it's not, it's sort of like pretty flat, which means it could swing either way. People could short the market heavily or start piling in. I mean, today we're hitting right now as I speak. S&P's 39.92. I believe that's an all-time high right now as we speak. I probably should be doing a trade. Um, Now, sentiment really is a bit mixed. The traditional surveys have been a bit buoyant, and of course, we look at this in a contrarian way, so that's not that great. But I found it very interesting, even post stimulus, that the we'll call them the Robin Hood crowd, the GameStop players. To me, it looks like the balloons deflated a little bit on that end. You can see that in the SPACs market also, which is good. And the funny thing is, we've had this dichotomy between both of these issues, the traditional surveys and the Robinhood crowd, all the way back to last year. So that continues. I would say on net, just in sentiment, I rather, if I'm bullish, I rather be seeing more negative positioning and also sentiment. Um, Now, just touching up on some of the issues that I mentioned last week, and you might want to review this the older video. I was mentioning on the risk side, inflation issues and how that was affecting the bond market. Um, and I specifically mentioned the 5-year, which, along with the 10-year, just this week, have they're trying to find a bottom in price, but not quite yet. They're a little bit weaker yesterday and today. Um, but the question is, will the equity market look through this, get comfortable with higher rates, look through it as an accelerated reopening, which is not that bad. Um, and today we're getting the fiscal infrastructure plan by Biden. That's just today. I was mentioning that the prior video, so that's at least being proposed. We'll see if it goes anywhere. It's massive. And lastly, the big issue that I mentioned before, and this is a longer term issue, the great rotation, money coming out of fixed income into equities. That's very prevalent. I did promise, I'm sorry, to put up a chart from JP Morgan that shows the fund flows. I didn't do that sort of on purpose because today's the last day of March. We'll get an update on that, and I'll put that out when I see it. Now, last issue. If you've seen this before, I put up my dynamic hedge strategy. Within that, there's a section that shows tactical hedges against the strategic call on the market, whether it's a bull market or bear market, and then tactically hedge risk around that. I'm going to try to put something together for people that might be interested to see how that setup is, maybe on a weekly basis. So I'll let you know how that works out. I'm not exactly sure what I want to put together, just for tradecraft and whatnot. Okay, best wishes. Good luck. Bye.